I am Carl Sorgatz, President of Hawthorne Credit Union in Naperville, Illinois, and I appreciate this opportunity to appear before the committee on behalf of the Credit Union National Association, CUNA, and to express our support for increased access to capital for small businesses, particularly in light of the current credit crunch. CUNA is the nation's largest credit union advocacy organization, representing over 90% of our nation's approximately 8,400 state and federal credit unions, their state and credit union leagues, and their nearly 90 million members. Hawthorne Credit Union has offices in Naperville, Bolingbrook, and at Lucent Technologies, and provides financial services to employees of over 125 companies and to people who live or work in Cook, DuPage, Will, Kane, and Kendall counties. Through our Credit Union Service Organization, or CUSO, Hawthorne Credit Union provides member business loans to our members. 4 other Chicago area credit unions are also members of that CUSO. Small businesses are the lifeblood of the economy. For nearly a century, credit unions have been there to serve the business lending needs of their members. Our member business loans reflect the diverse background and expertise of our members. For example, in recent years, the credit unions in our CUSO were able to help their members achieve success with a landscaping business, a restaurant and sports bar, an environmental services company, and a long-haul trucking business. Credit union member business loans are relatively small loans. In 2007, the average credit union MBL was $181,000. Nationally, credit union business lending represents less than 1%, 0.89% of the depository institution business lending market. And credit unions have about $28 billion in outstanding business loans compared to $3.1 trillion for banking institutions. In general, credit unions are not financing skyscrapers or sports arenas. Credit unions are making loans to credit union members who own and operate small businesses. And despite the apparent credit crunch with respect to small business and other lending, the chief obstacle for credit union business lending is not the availability of capital. Credit unions are, in general, very well capitalized. Rather, the chief obstacle for credit unions is the arbitrary statutory lending limits imposed by Congress in 1998. Under the current law, credit unions are restricted from member business lending in excess of 12.25% of their total assets. This cap severely restricts the ability of credit unions to provide small loans for small businesses. This is at a time when small businesses are finding it increasingly difficult to obtain credit from other types of financial institutions, especially larger banks. The cap increasingly restricts credit unions engaging in business lending as they approach their limit. The cap also severely hampers credit unions who would like to enter the business lending market because of the startup costs and the requirements. The most significant cost is hiring staff with business lending experience. Credit unions approaching the cap face the dilemma of having to turn away members who are unable to secure business loans from other financial institutions. Congress can help by enacting several bills currently pending that would help promote greater credit union participation in small business lending. Credit unions support the provisions of H.R. 1537, the Credit Union Regulatory Improvements Act, COREA, which would increase the current limit on credit union MBLs from 12.25% to 20% of total assets, and permit the National Credit Union Administration to increase the threshold for defining a member business loan to from $50,000 to $100,000. A second piece of legislation that would facilitate credit union participation in small business lending is H.R. 5519, the Credit Union Regulatory Relief Act, which includes provisions that would clarify existing law that permits credit unions to participate in loan programs secured by the insurance guarantees or commitments of state and federal governments, exempt member business loans made in underserved communities from the MBL cap, and exclude loans or loan participations by federal credit unions to non-for-profit religious organizations from the member business loan limits contained in the Federal Credit Union Act. Another helpful bill is the Credit Union Small Business Lending Act, H.R. 1849, introduced by Chairwoman Velasquez. H.R. 1849 recognizes the need to enhance credit union business lending through SBA programs and is intended to improve small business lending and cooperation between the NCUA and SBA by excluding from the Federal Credit Union Act's definition of MBLs from any loan made in cooperation with the SBA under Section 7A of the Small Business Act. We also strongly support legislative initiatives that permit the SBA to reduce borrower and lender fees for the 7A lending program to the greatest extent possible. My written statement goes into further detail about what I have discussed today, Madam Chairwoman. In summary, I want to thank you and the committee for providing CUNA with an opportunity to express its support for further access to capital to small businesses. We urge Congress to enable credit unions to serve member business lending needs by enacting the important legislation discussed today. Thank you.